Hey guys, back again doing breakup structure this video. I'm sorry if it looked a little different. I broke my webcam because I had a pretty big injury. I kind of just like lost consciousness in my desk. I posted about it on my feed, and I just like took my whole entire PC setup with me to the floor. It was pretty insane. I don't really remember any of it. I'm okay now, which is like pretty good. But yeah, I just got a new webcam, so if I look a little different, it's my bad, guys. Anyways, today we're going to be getting into breakup structure. So I know what you're probably asking. Well, what is a breakup structure? No, bro, you're asking what is a trend line? Of course. Breakup structure. Okay. So we had spoken about market structure and trends, okay? And we know what clean and dirty price action looks like. This is dirty price action. This is not the right tool. Hold up. This is ranging, right? Price action moving sideways. This is clean. It's going straight up. This, not clean, going sideways. Downtrend, clean. When it's not that clean, it's pretty wicky because it is overnight. But you get my point. We want to see price go in a certain direction. But how do we know when it flips from bullish to bearish price action? You might be asking. Obviously, breakup structure. That's how. Okay, let us identify a breakup structure. Let's actually go to a cleaner time frame. Why is this so pee poo poo? Can we just go to like trading panel, replay trading? Here we go. Let's go back in time. Allow us to time travel. How about that? We'll go to like November 13, and let's go to 9 a.m. Where are we? The 21s, of course we are. And then we're going to go to the 1 hour and head over to New York Open because that's when all the money's made. If you're trading outside of New York, you're probably not making money because New York has good price action. Let's go. Okay, let's go to market open. Oops, where's my... All right, here we go. So let's see. Let's take a look. Okay, this is the pre-market. It's during 6 a.m. The time doesn't matter too much here, but it's important. Okay, price was trending up. Okay, as we can see here. I don't like this color. Hold up. It's like purple. Purple's kind of cool. Let's do purple. Okay, Okay, price is trending up, as we can see here. However, we did have a little bit of a downtrend here. How do we know if this was a downtrend? Here's how. First of all, we take a look at which time frame we're on. We are on the 5-minute. Remember, the higher time frame always holds the higher power, and we do see a little bit of a downtrend here. But how do we know when it breaks the structure to turn into an actual downtrend? Because we see it trending down. There's two things. We see it trending down, and we see it going into a downtrend. That's two different things. Trending down is just the way it moves. A downtrend is a confluence. It's telling you that price is actually going to most likely keep going down. Okay, like this is an uptrend. Okay, right? And this, if we remove this, is price trending down, but it's not a downtrend because it hasn't broken structure. So let's write this down. So there's uptrend, up/down, downtrend, and then there's price trending up/down. So if we want a downtrend or uptrend to happen, we need equals needs break of structure, meaning that we have to see price break the structure of the current trend that it's in. So if it's trending up, it needs to break structure towards the downside to be able to start entering a downtrend. Okay. However, looking at price trending up or down doesn't always mean that it has broken the structure. We'll just see which way it wants to move, but we don't know for sure. This is confirmation. So if we were to separate this is just visualization. I don't know if I spelled that right. I have dyslexia. And this is confirmation. Okay, we're gonna keep this anchored if I can. Here we go. Okay, cool. So let's identify it. A breakout structure. We know what highs and lows are, right, guys? This is a lower low lower low, oh sorry, lower high, and this is a higher low, or sorry, this is a lower low. Oh my god, I'm so tired. This is a lower low, lower low, lower low. This is a lower high, and up here, lower high, right? We learned about that. So let us know when it breaks the structure. We want to find the last, if it's in a downtrend, you want to find the last higher low available. So right here is the, here is the last higher low, okay? And what we're looking for is a close above this previous higher low. So let's run through it real quick with the replay tool to give you guys a pretty good explanation. So essentially what I'm going to be looking for here is a break to the upside, a trend break towards the upside on the 5-minute time frame. So let's run through it. Let's identify, I'm going to mark these out for you guys. Can I ever add text in these? I can. I can, yes, okay. Higher, low. Let's do that one. Let's make it like white. Let's make it higher, low. Perfect. So guys, higher, low. If you want to skip this part, you can. It'll be like a minute here. Higher, low. Perfect. See another one. Let's color code it a bit too. Why not? I don't even know how to color code these, to be honest. I forget it. I'm not gonna do that shit. Higher, high. Higher, high. Safe as that. This is lower, low. This is a lower. Okay, perfect. All right, let's get rid of B. All right, perfect. So here's our downtrend. We're looking to take longs, meaning we have to wait for a break of structure towards the upside. So that is our confirmation. So let's mark it out here. Here is a lower low. Right here. This is a lower high. Okay. Still going down. I guess you can count this one as a lower low. Right. This one right here. Lower high. Okay. Still going down. Where's our, here we go. Oh, see going up a little bit. So remember, we're looking for a closure above the latest lower high. So we can take this little trend line here, drag it out to the right, and we're looking for a closure above. I'm just going to mark this as a sweep. So we're going to look for a closure above this price value right here. So 21,646. Okay. Okay. Let's mark some more points out. So lower low, lower high. Oops. I wonder if there's a way to like auto select this, like a shortcut on my keyboard, whatever. Okay. Lower low. And we have a little bit of, here we go. Okay. So this would be a lower high once more, right? And then right here, another lower low, right? And we're looking for a lower high right here because we can't have a lower high above. Oh, sorry. Oh, shoot. I kind of messed it up. Every single time a new lower high forms, you want to move this down by 1 because you want it to break above the previous one, right? So if this is the last lower high and this is our next lower low, we're expecting a lower high beneath this previous lower high. We're not expecting another lower high above the previous lower high. It doesn't make sense. It needs to be a higher high, right? So let's take this, let's move it here. And then we see price break above it. That would be our breaker structure. However, I would like price to break above this one since we have this gigantic bearish candle here, and this could be a fake out, right? Like you just want to play it safe. Like if you're looking here, it's kind of confusing. There's too many orange dots on my screen right now. But basically, let's kind of delete these. We don't really need to look at all these right now. It's just for you to know like what are lower line, higher lowers, and all of that. And you guys know what it is. But you want price to break above the previous like top or bottom of the trend. That's basically it. And we're not looking for a wick. Like for example, if price were to come up, kind of go up here and then come back down, we're not looking for a wick. We're looking for the body close. All right. So if I were to draw it out, let's draw it out real quick. Right? If price. Actually, let's do this. Okay. So yeah. Okay. Lower high, higher high, lower higher low. Sorry. Higher high, higher low, higher high, higher low. We're expecting a higher high, right? No. What if price creates a lower high? Or sorry, lower low. Oh my god, I always get this confused. I honestly always get the lower highs and higher highs confused and stuff. If you're seeing price trending and you mark the bottom or the top of the previous points, where like if you're expecting it to keep going up like this, a closure past this line right here, this is a breaker structure. That's it. Okay, but it has to close. It can't just wick into it and then keep going this way. No, it has to close. That's it. Like guys, you can be stupid and do this. I'm literally like, I don't even know the names of what I'm doing. And I still do it really good. Okay. Boom. Right here. Candle closure, not the wick. Okay. Candle closure. Mark it out right here. And you can mark it as a breaker structure. I used to have them. I don't have them anymore, but I would write down, here's what I would do. This is pretty good education. I'll tell you in a second here. So let's just say I'm looking for a break of structure towards the downside now. Okay. What I'm going to do is I'm going to go to the latest high or low, whatever I'm looking for in the opposite direction. Let's make it white. Okay. I'm going to write down. It doesn't matter what I'm going to write down. Forget it. I'm going to mark it out. Okay. This is the latest low that was formed. I'm going to keep waiting until price breaks that low. All right. Boom. Higher high was formed with a higher low. That means we're moving this right here if we're looking for a short. Now I have to wait for price to break this. Still trending up. In fact, it has now broken structure on the higher time frame. So let's say we were to go to the 15-minute. If we get rid of all this on our screen, so this is what I mean by the higher time frame holds more power. So if we weren't to look at any of this, right, and if you were to, can I make this fully opaque? Background. Perfect. Oops. Do this. Let's just, I'm just gonna not touch my mouse. Look at where I drew the white line from. If we were on the 15-minute and I was looking for a break towards the upside, since this is the higher time frame, I will be looking for it on that wick because that wick is the latest high that was formed, right? Because we haven't fully formed a low yet. Otherwise, it would look like this, right? It would have to be like something like, if it was trending down, be like that. Then like you would mark it out here or here, I mean, right? But we didn't have that yet. It just kept going down. And then it broke structure and closed. So now what I likely want to see here is for it to keep trending up because it's trending up now in the high time frames, and the higher time frames hold more power. So let's just watch market open. Let's see what happens. Still, oh, yep, there we go. It's still an uptrend. It doesn't matter if it was coming down here because it hasn't broken structure. See, this would be the previous lower low right here, but it just wicked. It didn't close. Okay, don't get fooled. These people who take breaks of structure off of wicks would have gotten fooled and taken out. Okay, the body has to close. Let's see where price goes. Okay. Oh, now it's broken structure towards the downside because this larger, higher time frame wick has closed below this previous low. Same with this one, indicating even more confluence that our bias today will be short because we took opposing liquidity over here. Yeah, it was overnight. We took opposing liquidity and now we're trading down. I don't even know if I did a video on liquidity yet, but I probably will. No, I haven't yet. Boom. We took the liquidity down here and then we almost did. I'm pretty sure I'm on MNQ right now, but it doesn't matter. Then we start trending up. See? It's not always that your bias is going to play out. Like it broke the structure towards the downside, but you can't just use one confluence to enter trades. And that's what I'm going to be teaching you here. All the different types of confluences, ways you can enter trades. So this is a breaker structure. What I want you guys to do is I want you to head on over to this link right here. Okay, it's going to be FX Replay. Me personally, I don't use it because I already have premium on TradingView. This will be it right here. fxreplay.com. Copy this. Go into your browser. Buy the premium package. It's like $300, but don't actually like. It's a free trial, right? Just get a card, that has like a low limit, and just set it in case you forget. And go back test on FX Replay because you can use this feature right here, or do it on TradingView. It's up to you, whatever. Because the replay feature will seriously allow you to test whatever you're doing on the charts. Because without it, you're just like looking at what's already happened, and you're psychologically going to think different. You can't be doing that. So what I want you guys to do is I want you to identify trends. Okay. So as you can see here, we were trending down. I want you to mark out the previous highs or lows and wait for price to close below or above that at that point, right? And what you're likely going to see afterwards will be, and if I were you, I would do in the 5 minute during 9:30. If you're going to be doing any types of charting or any types of backtesting, try to stick towards doing it at 9:30. And I'll tell you why in a second. I'll explain what backtesting is in a later video. But if you're going to be doing your trading from, 9:30 till like 11, that's our New York AM session where we make the most money. You want to be looking at the data from then. You don't want to be looking at the data from other times of the day. It doesn't really make sense. So that's what you want to do. And just identify what is and isn't a breaker structure, and watch how people get taken out by thinking that a wick is a breaker structure, because it's not. So if you're looking at the 15 minute, it did kind of close actually below it, but you have to think about the fact that this was showing insane rejection because of how long the wick is. That's another thing about wicks I didn't tell you guys. If you see a wick longer than a body or extremely long compared to the body, that's a rejection. That means that, yeah, sure, it closes a bearish candle, but this is what happened inside this 15-minute bearish candle. I started out up here, kept going up, down, whatever, and then went down, but then went right back up. Like, this is what happened. And then if you were to keep following it, it broke the structure towards the upside because it closed above this previous high. So yeah, that is a breaker structure. The way that we use it in our trades is simply to confirm that price wants to go in a specific direction. But how we use it specifically is a lot of people, I'll explain to you. This is a pretty good, I think it's called like turtle soup or something. I don't know. A lot of people do this. I don't do this stuff, but we see price trending. We see price trending towards the downside, and we're looking for longs, let's say, because let's just say we're waiting for liquidity pool to get swept. I'm going to explain what that is in the next video. And we're looking for longs, okay? So boom, 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 and then liquidity gets hit, and then now we're looking for a reversal. We see price kind of, kind of going up a little bit, and it's closed above this previous high, right? Meaning that we're now looking for longs because it has broken structure towards the upside. Now, here's where the sauce comes in. People like to mark out other confluences, such as a fair value gap, right? Oh, why is it black? People like to mark out other confluences, such as a fair value gap, and then to continue long, because we broke structure towards the upside. And what happened during this leg right here is a retracement. So understand this. This is a little bit more complicated, but if you don't understand it, that's perfectly fine. Like, please don't bring yourself down. What's happening here? I'll break it down. Price is trending towards the downside. Okay. And we're in a downtrend. Now here, price starts trending towards the upside, but then we break the structure towards the upside, meaning we have now entered in uptrend. What happened here is very, very special. This is a retracement because price has to move lower in order to go higher and vice versa. Okay. So we've broken structure towards the upside, meaning that price wants to go up, but we have to go down before we go up. We can't just keep going up. Okay. Don't think like that. Just trust your confluence and trust what, this technical analysis is telling you. So if we see price going down and we have another confluence here, a confluence, like I said, I think I've said it before, is simply just an indicator or tool or chart analysis that tells you that price wants to go in a certain direction. I'll explain those later. Like, for example, a break of structure is a confluence. It's a strong confluence because it quite literally dictates which way price wants to go from looking at the chart. Like, it's not based off of a reaction. It's based off of price action. Okay. Like, price didn't react off of anything to break the structure. Like, maybe it has, but that's a separate confluence. So let's just say we have liquidity right here. It takes the liquidity and keeps going up. But this break of structure didn't happen because of the liquidity sweep. The liquidity sweep is its own confluence. Okay. So it wasn't off of a reaction. It's off of market structure. I hope that wasn't too confusing. You don't really have to know all that. Just know that what a break of structure actually is. Like I said, you don't need to know all of this yet. But yeah, that's what a break of structure is. You want to be looking for those as you are trading, because it's, you know, you're not going to take like a short here. After price is already broken structure towards the upside right here, you're not going to want to short this. You really aren't, because this is a retrace. The only way you would ever want to short this is if you're playing a retracement. And even then, it just doesn't make sense, because the trend is your friend. You don't want to go against the trend. Okay. Don't be that guy. And if you are that guy, then you know what you're doing. And that's not why you're here. So that is what a break of structure is. I apologize for my my face. I know I look kind of tired. It's all right. This is like my 2 a.m. look. Yeah. Thank you. Bye.